Hi, my name is Ryan Finch with First Class Real Estate and the Ryan Finch Real Estate team. I want to do a quick video for you guys that are getting a tax return. I want to make sure that you guys are using that money to buy an asset instead of a liability. I know there's cars and TVs and lots of shiny things that people are going to be bringing in front of you, hoping that you'll spend your tax return with them. My hope is that I'll show you a way to invest it in real estate so that you can get an even bigger check back next year. I'm also a real estate broker at First Class Real Estate and an author of a book that tells you how to get into the industry if you're interested in selling real estate. Right here you'll see this is how you get your money back. You get a check from them, you come buy a property with us. We're even going to, after you purchase the property, in most cases, you'll be able to get a check back to you. This check was even written today to a client who purchased a home, put money down, and then got their check back at closing. So there's a lot of different programs out there. You can get properties with 100% financing through VHDA. You can do a VA purchase and get 100% financing, as well as there's other conventional products. So we'll go through that based on everybody's independent needs. But in this case, I wanted to break it down in the event that you wanted to put down 3% and do an FHA loan. So if you purchase a property for $150,000 and you put down $4,500, you'd have a $145,000 loan at a 4% rate, which you could be getting lower, but interest rates go up. So this is why it's important to invest in it now, because the rate won't change once you do a fixed rate. We're gonna do a 30-year term. You can do 20, but 30 is a general one to get your payment at a comfortable level. Now, in most cases, you can't live in a home for less than this payment is right now, which is $859. That's principal and interest, taxes, and insurance. So we've accounted for everything from the purchase price. We've added in the $1,500 in taxes for the year and the $500 in insurance. That's all wrapped up into your payment. Now, I just want to break this payment down for you so you can see how you'd actually save. $209 every single month. Every time you pay this payment, adding up for the year is going to give you $2,500 of principal. So that means that's going to pay off this payment in 30 years. Now, the way it works is there's a principal payment will go up over the course of a period of time. So your next year would be $217, and then each payment it goes up. So this number actually goes up every year. Then of that same payment, $480 is interest. So from this number, $480 each month gives you a $57.96 in interest. You're like, okay, great. I paid $6,000 in interest. Now again, this number, just for educational purposes, this number goes down. So this goes up and this goes down to keep this number the same. Okay. Now, if you were purchasing this home, the average income is roughly around $40,000. If you make $40,000, you roughly pay about 20%. Now, I'm not a tax guy. You're going to have to talk to your accountant or your CPA. But 20% of $40,000, you pay $8,000 in taxes. You get your paycheck, it's already taken out. This is the money you're going back after at the end of the year, less what you owe in percentages. Well, with the purchase of this home and this interest rate, it would deduct from your purchase price, from your income. So if your income's $40,000, now the IRS looks at it like you only made $34,000. When you've made less money, they tax you at a lower rate. So this purchase now allows you to be taxed on $34,000 versus the full $40,000. And at a lower rate of 15% versus 20%, giving your taxes of $51.30. So if you were already doing your taxes and you paid out $8,000 and you get back $2,000, in this case, your check coming back to you would be $3,000 more for the same work and the same income based on purchasing the home. So you're gonna have your $2,500 savings, you're gonna have your $3,000 in tax savings, and then a bonus is that on top of that, in most cases, homes go up in value every year at around 3%. So 3% of your purchase price now puts you at $4,350. So now that's a total annual return each year of $98.50, with the possibility that you'll be getting a check back to you, so which means you'll have zero money out of your pocket, now saving $98.50 and most likely paying less than you pay in a rent payment now. If you need anything, give me a call. You can call me at 255-8289, or you can go to the website, finchteam.com. That's FINCHTEAM.com. If you're buying, call Ryan.